Let's get going. It's the top of the hour. I am in Uvita, Costa Rica, without a car on the way to San Jose. So, Pura Vida is kicking in now, man. Hey, it's okay. It's all right. It's a feeling. Pura Vida. Pura
You
Vida.
probably need a little bit more of Pura Vida, Mike.
I could use some. Maybe I'll have to find some in medicinal form. All right. Well, stock, crypto, and options trading has large potential rewards, but also large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the stock, crypto, and options market. Do not trade with money you cannot afford to lose. This is neither an offer to buy, sell, or recommend a particular stock, crypto, or option. Let's take a look at the markets. As you know now, the Fed meets next week, right? November 1st and 2nd. That's next week. Today's not November yet. Am I right? Yeah, I'm right. It's next week. What day is it? So that's coming up. You know, the climate of the market, we're expecting some kind of interest rate hike, probably 75 basis points, could be higher. Who knows? The market's all over the map. Let me just start with news a little bit here. So yet another respected industry analyst, or not analyst, but he's a president of JP Morgan, says that a recession may be like maybe the price to pay to beat inflation. Market bottom not in yet. These statements are coming out pretty much routinely from some of the top financial leaders in the market, and you know it's more likely. So ultimately, whatever's happening in the market, it is bouncing. We should see further downside just based on inflation, recession, interest rate hikes, all of that stuff that we've been, beating the drum on for quite a few months now. Now, this to me was interesting. Alibaba 10-cent shares plummet 11% alongside China tech stocks as President Xi tightens up grip on power. So here's what's going on there. He's building up his cabinet, his communist cabinet. And it's expected that that cabinet will tighten up, bring in policy that will have a negative effect on the Chinese market, making it harder for them to do international business, for example, stuff like that. So the markets have been plummeting in China. And this morning, we're going to see gaps down on stocks like Alibaba, Baidu, Tencent. There's quite a few others. So what I'd like to do this morning with the sniper context in motion is to go find the weakest of the weak and grab some profits, snipe some profits on stocks that are getting spanked. So that's ultimately the strategy. Wells Fargo, I just saw this. Wells Fargo downgrades FedEx. I'm going to write FedEx down. We may take a look at that one when the market opens. Tesla shares down 3% in pre-market after Elon Musk EV firm cuts price of cars in China. So we could look at Tesla. So this is a fun game. I like doing this. This is really a fun thing to do. Stocks making the biggest moves pre-market: Tesla, WeWork, Alibaba. So maybe we'll take a look at WeWork. I don't know what's up with WeWork, but we can look. So I'm just building a little bit of a list of low-hanging fruit. This is what attorneys do, and they look for people that have had accidents, citations, speeding tickets, and they go through public records, and then they reach out and say, hey, you want me to represent you in court? So it's a similar thing. Ambulance chasing is ultimately what we're up to here. I'm going to go to Bloomberg quickly. We're not going to see much more here. Let's see. Nothing more than I've already seen that's got my attention. If anybody else sees any stocks that are in trouble, please speak up. Let's go take a look at the pre-market, the futures. And I'm going to start, of course, with the S&P 500. The /ES, as Matt calls it and Tom calls it, we're in a box. So the upper part of the box is resistance at 3,800. So far, pre-market, that's held. And then we have super strong support at 3,600. And we've set a 3,500 low during that bounce. Now, interestingly, this pattern here, I keep talking about it, but when you see this is called capitulation, but not super duper capitulation. That would be massive volume. But on this day, 5% swing, a bounce off 3,500. The volume was above average, the highest green volume in a while. Bounce off 3,500 like a slingshot. We open here, we touch here, we close there. So think of a slingshot, stretch, boom, and momentum that often happens and has come to fruition here, despite the down day the next day. This is a very solid pattern most of the time. I'd say 75% of the time that works. So it's a nice direction. It's I'd say it's my favorite candlestick pattern. It works the best, I think. And here's another example of it. And there's plenty of them if you look at any stock chart. So maybe this bounce is about to conclude, but we're at a good point. We're at 3,800. From here, if we get a break above it, expect to move up to 3,850, 3,900. This is the 50-day average here. So we're at a nice spot here. We'll see. I don't even know why I say this, but I would be surprised. I've been surprised a lot in my life, especially this year, but I would be surprised, and during COVID too, I would be surprised to see a close above 3,800 and further upside. So I think we're going to hit this resistance level and bounce and stay within the box, probably between now and Wednesday, 2 p.m. next week, when the Fed lifts interest rates to probably 75 basis points. So that's what's really kind of going on in the market. I could look at the other indices, the Dow, the /YM, a little more bullish in that it's now broken above the 200-day average. Looking at resistance, 31.5 is resistance, and I see it here. There's resistance, support, resistance here. So we're at that level. We could see a further run, and it's possible for the Dow to be stronger than the S&P 500, of course. What about tech-laden NASDAQ /NQ? Similar pattern to the Dow, a little bit of a box, right around here, 11,600. I'd say is a good 11,650. I think that's probably the best support resistance level we could draw. So we have that going on. So we got resistance here, support here. Most likely we'll stay within the box there as well. /RTY is the small cap stocks, the smallest 2,000 market cap stocks in the U.S. market. Strong resistance up here too. So similar pattern pretty much across the board, other than the Dow. The Dow seems a bit more bullish. Let's take a look at gold. Gold came up hard on Friday and down today. The reason for that is the US dollar tanked on Friday. So the US dollar tanks. Let's go into Tom's tools. I'll do a quick overlay, so it's much easier to see that way. They pull up a chart of the of gold, and then we're going to overlay not paired UUP. I'm going to keep candlesticks there. Take this down to maybe 40 days, and we're going to have a candlestick chart overlaid. Let me get rid of the moving averages too. We don't need all those extra lines there. Update. And so that's what happened Friday. So the inverse relationship is intact. There's no sign of risk off yet. Even though gold came up, it's because the US dollar got weaker, propping gold up. Today, I don't know what the UUP is doing. I don't have Forex. I can check pre-market. UUP is up a tiny bit. Gold is up. Let's see, gold futures. Gold is down a little bit. So the inverse relationship is still intact. No sign of risk off, which is why I generally look there. TLT, which is the ETF that tracks bonds. My God, that's awesome. Bond futures /ZB. I mean, this could be a nice little bear call spread for a sniper trade. Those of you in hedge fund, beautiful broken wing butterflies on these. I like a double broken wing on the TLT. Perhaps we'll talk about that tomorrow during live trade. What's oil doing? I don't know. Yeah, oil's kind of, just oil is choppy. It always is. It's you're one announcement away by OPEC, and oil will move sharply one way or the other. So we had our OPEC news. We've got some a decline in the price of oil, probably because of inflation, and we're heading sideways with oil right now. Nothing much there to play with. It's quite volatile. It's hard to predict where oil's going to go next. Oral's going to go next. Okay. So that's a general complexion of the market in 10 minutes. It's about all it really takes. And so what I'd like to do now in the 20 minutes before the market. Oh, let me set us up for I went looking for Chinese stocks. And these are the main ones that I found that I like. And so there's other Chinese stocks. The problem I was having is when I was going through the ETF database that I subscribed to, when I looked at the component stocks for the China large cap, it doesn't give you the actual stock symbols. Because these are Chinese companies, they're listing the symbol in a number. And I can't, that doesn't work. All of these stocks have actual stock symbols in the in Tom's tools and in the broker sites. But some of these you'll recognize: Tencent, JD.com, Bank of China's in there, Baidu, NetEase, and NEO's in here. There's also a couple of Chinese ETFs I like. Let me show them to you. FXI. Look what's going on in the Chinese market. Pre-market, the FXI is at 2180, let's call it, dropping from 2392. So there's going to be a sizable gap down there on the open. The other one is MCHI. And this one's down from about 39.90 down to 36.5 roughly. So we're going to see gap downs on the open on those. And so these are the stocks that I've come up with so far. I've got the FXI in there, and the other is MCHI, which I forgot to mention. Oh, that's the one I just did mention. Okay, so we got this. This is a small list of stocks that I have, and I will post these in the WhatsApp thread for now. Well, we don't have one for snipers. Let me go ahead and put this as a post in the MW Trade Coach boards, so that all can grab them very easily. So let me log in quickly. I'm not in this website just yet. And let's see. Let's go to the forum. And then under snipers, what I'll do, I'll click snipers. And this is a general topic, new topic, Chinese stock list. And I'm just going to post them in there. Control C. So if you want these for live trading right now, you can grab them. There's others, but those are the big ones. Create topic. And now if you go to the boards, you'll have those. There's a lot of AI in this. Doesn't look like a complete sentence. So I got to make a complete sentence, or somewhere close to a complete sentence. Okay. Create topic. All right. So it's there. If you want them, they're there. Okay. Let's go to our portfolio. There's a couple things I want to talk about. First off, let's talk about our trades that are doing well so far. The iron condor. Let's start with the iron condor on coals. I saw some posts about this, and this is where it ended up. This is where it ended up on Friday. Now, what I do with these, at least from a simple standpoint, is, just trade them by the break even. If the stock closes outside of the break evens, then shut it down. That's the basic system. If you do it that way, and there's no huge gaps, which are possible, then you're gonna keep your risk mitigated. So that's the simple basic rule. That didn't happen, and had you left this thing to expiration, it would have expired worthless. Now I'm interested to see if anybody handle this differently. We could use part of this time for some coaching. There's other ways to handle it. And I'm going to show you one of them, one way to handle these in a live trade that we have on CVX, Chevron. Okay, so if you look at Chevron, the stock, that's Zoom, sorry, I'm on the wrong one here. Here's Chevron. Let me pull it up. I've got some adjustments I want to talk to you about. All right, so this was this is one of these. It's so funny. These long-term credits have gotten hammered the last 6 months because of these volatile swings, and the oil was dropping with a strengthening U.S. dollar. Then OPEC came out and said they're limiting supply, driving the price of oil up, and then Chevron went with it. It closed above the break even. That was Friday. Yes, Friday. Yes, close above break even on Friday. The rules say get out. And if you get out of this one right now, you're down 41%. You take your uppercut shot to the jaw and you close it down and you go do some more. And back test, you're going to lose about 25% of these. 25% are going to be losers. This is just one of them. And so I know what happens in these calls is that we tend to try to adjust a lot, which is great, but let's not throw out the baby with the bathwater. Remember that one trade does not a trend make. And we know historically, these things at the end of a year will average you about 10 to 11% losers considered. Okay, so that's the baseline. And if you're finding adjustments a little bit out beyond your scope or your cup of tea, just do it that way. Take your loss and move on. Now, here's some other ideas, though. I have this thing called batten down the hatches. Imagine those, there's this coral animal, and I forgot the name of it, but it has all these tentacles. And then when a fish approaches or danger approaches, it goes whoop, and it sucks in and protects itself. So similar, or even a ship as it's approaching a storm, battens down the hatches, reduces the risk of the losing a sail or the ship capsizing or flipping over. So it's batten down the hatches. And so the outcome of batten down the hatches is to reduce risk. Okay, so here when we started, now, by the way, if don't hold on to this thing. If you don't want to adjust it, you got to exit, because you could lose more than 365. Forget about the loss of 365. Put your attention on, well, heck, I could lose $500 plus more. That's our focus as traders. Where's my risk? How can I mitigate it? How can I give myself an opportunity perhaps to make some money? So that's the general idea. And so the first part of batten down the hatches is to contract. Think of a bellow where the upper arm of the bellow is 180 and the bottom arm of the bellow, those bellows. So it's expanded. So what we want to do is drop the 180 call, the upper bellow arm, squeeze it down, blow out risk in the trade. All right, so what's blown out of the trade would be risk. So just that contraction, that's I did it the other way around. Let me do it. So let's just see what happens if I'm going to duplicate the trade, edit the duplicate, and simply drop the 180 down to 175. And my expiration is December 16. I'm going to find the expiration December 16. And I want to sell the upper 180 and buy the lower 175. Of course, that has to be a sell, and that needs to be a buy.
Typo on your strike.
Pardon? Oh, yeah. Thank you. All right. So let me color code this as a contraction. And now let's look at our risk. So our risk was 882. And now by contracting the upper spread, dropping the 180 to 175, there it is. Sell the 180, buy the 175. that contracts our risk to 600. Okay, we can still, we're still down 365, and we're not going to make money on this adjustment. So what about reducing the risk further? So the other thing we can do, now that we've contracted the spread, is sell underneath. So sell a credit spread or buy a debit spread, doesn't really matter, underneath. So our short strike, let me edit this trade and make it a lot easier for you all to see it. Our short strike is still this one. Let's make it that color. That's our short strike. So now we have the ones, we still have the 170 short. And now we also, instead of the 180, we have the 175. So let me color code that one as well, just to let you know what we have now. Okay, so we're short the 170, we're long the 175. Okay, so here's what I want to do. I want to sell some more 170 calls and then buy some 165 calls underneath. So I'm going to double up on my credit and reduce my risk further still. Let me do that right now. So I've duplicated, going to edit the trade. And then I'm just going to add those legs. December 16. You could also use puts. And if you want me to show you that, I will. So we're going to sell the 170 calls. And we're going to buy 165 calls. Let's give it a color. How about green? I'll take green. That'll be good. So this is going to generate less. It's going to drop our risk further still. I've done something wrong. Oh, I got a put underneath there. I missed the put. That has to be a call, of course. So what I'm doing here is just converting the trade into a butterfly, a tight butterfly. And now look at our risk. Our risk has been dropped all the way from originally 882 all the way down to 400.
I'm not able to calculate that.
So
You can
now,
always check the formula and ask it.
so now when you look at this, there's only $40 more you can lose on this trade. You see that? So current profit is negative 365 and our max risk is 405. So that's $40. So now you're in a trade where, are you going to make money on this? Not like this, most likely, but at least you're not going to lose much more. And there is a possibility that the stock hangs out in this range here. All right. And I have a Walmart trade I did, and I got lucky on it. And the stock ended up, I was down 1,100 and I ended up making a couple $100 because Walmart did in fact hang out in this zone here. Okay, so there's not a lot of profit in this trade. It isn't about profit, it's about losing less. So this is one adjustment that you could consider. And then if you're a hedge fund trader, the other step from here is to put a broken wing butterfly up here and another down here. And then as the stock's moving around, if you double up on your butterflies, the game then becomes to make $400 on two other trades, two additional trades, hedges that will make money here, offsetting the loss in the credit spread or the butterfly, and then another bearish one here that will offset loss there. So it becomes a street fight. You know, we have at this stage, the delta in this trade is 0 virtually. And you can see it in the red line. Stock goes up a lot, no problem. Stock drops a lot, no problem. If you do derive a directional prognosis, CVX starts getting bearish, then you simply pull off this bottom credit or debit spread. This 165, 170 debit spread underneath. You just buy it back. That's the bullish wing. Or the bearish wing, excuse me. It's the bearish wing, and then you let sorry, let me start that over. I don't think I said it right. So if the stock starts dropping, we could easily pull off this part of the butterfly, which is the lower call spread. And that would allow the upper bearish credit spread to generate cash or a lot less loss anyway, if the stock drops. So here's how it would work. The stock breaks down below, let's call it 165. That's currently support. It breaks below support. You haven't lost much more money, at least for the next handful of days. Well, 56 to 38. What's that? 18 days. So the next 18 days, the stock's at 165 and your loss is 362. That's better than 365, but not much. But you still, the point is you're not losing any money while you're waiting for the stock to make a move. And so if a stock drops down here, pull off the bottom spread and let the bearish spread run. Vice versa, if the stock continues to make a strong run, you're not going to lose any money. You might even make some money over time. Stock gets up here, then you close out the upper spread and let the bullish spread, the opposite spread, run. So that's another simple way to handle it if you don't have broken wing butterflies in your arsenal yet. So let me pause for a sec to see if there's any questions. Johnny White says, anemone. Yeah, anemone. That's it, Johnny. Thank you.
I also
anemone.
have a little show and tell about that trade you're talking about, because I did exactly the wrong thing because I wasn't paying attention to my strikes.
Yeah.
So if you want to talk about learning from it, I did.
Yeah, maybe we'll do that at the top of the hour. I want to get into some trades, but yeah, Johnny, you're always good about being transparent about mistakes because, you know, I even make them sometimes. Everybody does. And I think it's a good learning experience. And I really appreciate your willingness to be vulnerable about that. And it serves everybody. So thank you. All right, let's do one more. There's so much to talk about. Now, here's a cool way to handle Zoom. Let me, I'm going to go ahead and cement these adjustments here. I'll manage this. Zion, stop it. I'll manage this over time, and if there's adjustment opportunities, there will be. I'll certainly talk about them with you. Now, here's. Let me get rid of these tabs here so I can keep track of where the heck I'm at. Let's go up here and pull up Zoom. So Cole's expired. KRE is in good shape, everybody. This is a bearish credit spread on the banking sector. There's a slippage issue at the close on Friday. The market makers really widened the slippage to close out the week, basically shutting down trading on this instrument. Now that's a risk in this system. This instrument, the options slippage can get wide sometimes, so you got to be careful with that. So don't get sucked into, that's our loss, our gain in the trade, I should say. We're still playing for a max profit of 13% on this one. And this one's fine. Over time, we've got 56 days left. Unless the banking sector takes a hard run up, we're in good shape on that one. That's really important that when you see these numbers here, 369 profit, and you got to go look at slippage. It's revealed in the risk graph here. When the lines are jacked, like where they shouldn't be, that's a sign that there's slippage. So if you ever see that, it's because of slippage, and it can work against you too, depending on which leg has more slippage. You might find if your short leg has a lot of extra slippage, then you would end up with a temporary loss. But this is the guiding force. This is where we're still at. The stock is here. The phantom profit is there. Ultimately, that's our profit in this trade. Okay, so that one's cool. Now let's look at Zoom. I think this is cool. I love these iron condors quite a bit, actually. So here's where Zoom is today. Okay, so we're pretty much breaking even. And let's see where Zoom is right now. Pre-market Zoom's at 81, so it has cracked above 80. Let's see why. Tesla, I don't see any prominent news, at least recently. Okay, there's some basic news about it, but I don't see any upgrades or downgrades or anything. But Zoom is threatening to break out of its range. So our line in the sand was way up here at 85. The stock's at 81. So it's starting to get, we got till Friday, by the way. At Friday, if the stock is below 85, this is our upper short call spread. It's two credit spreads. We got a short call spread at 85 and another one at 65. All right. So the rules of this are if the stock closes outside of the backyard, then shut it down. But we can get a little more aggressive on this one. Here's what I think. I don't think Zoom is going to drop below, let's call this 70. All right. I don't think 70 is a problem. So there's some workers at the house I'm at. So what I want, one move we could do is, look here, we sold this 65, 63 credit spread underneath here. Well, what's that? 27 cents? Yeah, 27 cents of credit. The spread is worth 2 cents now. Look at the ask price on both, and the spread is worth about 2 cents. So we've made 25 cents on this winning put spread. So why don't we get some more? Let's close the 65 down and then buy this or sell, and then so buy the 65, 63 spread back and then sell another spread at 70, 72 or 70, 68, excuse me. Something remarkably like this. This is it. So what we're doing here is we're buying back the original spread. Just got filled on something. Market's open. Yay. And then I'm going to sell the 70 and we're going to pull in here another 5 cents. Not a lot of credit, but you know, it's credit. It's free credit. Why not get it? And so that adds $15 of, let's say 5 cents, $15 of additional credit to the trade. You could get more aggressive. I wouldn't in this case. Just kind of get a bit more credit. You might as well. That lifts the break even up a little bit. So that's an adjustment. Go get some more credit. Your break even is slightly higher. Let's compare. The max profit to max risk goes up to from 20% up to 24.61%. That's what, a 20% increase in the return on investment. And so that's a move you can make. And then the other is what I just talked about, which is, yeah, I've got risk up here and down here. That's a lot of risk there. That risk in my mind is not in jeopardy by Friday on expiration, but I could, you know, the stock's making a fairly strong run. We got strong resistance at 83. It's still in really good shape without any adjustments, but you could also do the batten down the hatches as I spoke about before. And this is an example of that. And so now there's an extra adjustment here. Let me see, I've got it right here. Okay, so what I want to do, I've got it wrong. Let me edit this trade. I was rushing this morning. So here's the contraction. The contraction's the red. So we're going to sell. Oh, hold on a second. Let me make sure I got figure out what I did here. So here's where we lifted it up. And then here, what I want to do is sell these 87 calls and buy the 86s. Okay, so this here is the adjustment I just gave you, which is to lift up the spread, the short spread, buy back the 65 short spread, sell the 70 short spread. I've also, in this case, collapsed the distance between strikes to 1 for more return on investment down here. And then I tighten up the upper spread, dropping the 87 down to 86. So this is as good as it's going to get and still remain in an iron condor. And then you have that. Now with this trade, your max profit to risk is 368. Your max risk has been dropped from 230 down to 237 from 498. So there's another way to play with these credit spreads. You can literally trade credit spreads like pieces on a board. Move them around like you do in chess. Move up the lower put spread, tighten it so it's 1 point, and then drop the upper long option on the bearish credit spread above, contracting, blowing out the risk in the upper trade, dropping your risk to 237 and giving yourself a chance to make 26% versus what, 20%. So that's what I would do on this trade. And again, you can keep doing it to the end of the week, depending on what happens with the stock. The new break even upside break even is 85.21. And then the original upside break even was 85.34. So it's a little bit less favorable, but still our risk, it's still we still got 85 resistance. If we close above 85 resistance, as we get closer to expiration, the amount of loss there will be mitigated. So I'll post this batten down the hatches adjustment on the boards after we end our call today. So let me pause for a sec. That was a lot of material for first thing Monday morning, but it's our game. Any comments, questions? Okay. I'm assuming everybody understands what I just did then. Good. If not, don't be shy. This is a safe room. All right.
What about in doing these kinds of things? One of the things I'm concerned about is since these are very, very low priced options, would you consider splitting things up? So for example, you're going to close off part of the iron condor and then open up the new trade as a separate trade, because otherwise they may not fill.
Yeah, the adjustments, I think if I got your question, let's talk about that.
Yeah, the adjustments, not doing, for example, a close and open all in one trade, but close down parts of, the leg you're going to close and then open the new one as a separate trade.
Yeah, here's what I would do. So the first thing I would do is contract the upper. Okay, so that's a risk mitigation move. And then after that, I would buy back the 65-63 put spread, the original, and then I would sell another. So I'd have 3 separate trades is how I'd manage it. You could do the roll here in one order. But yeah, I think doing them as individual orders is fine. Remember this put spread down here, there's no urgency. The spread is so far out of the way. I'm not as concerned with moving it up as much as I am contracting risk out. So I would contract the risk, blow the risk out of the upper spread, some of it, a lot of it, and then buy back the winning put spread and then sell another at 70. That's how I would do it. Okay. And it's an order of urgency, right? Risk management is our game. Let's risk manage. Okay, that's taken care of. Let's get a bit more credit.
Okay.
Yeah, good point. Okay, let's see what the markets are doing. It's like Christmas every day. The Dow's making a strong run. Let's go to the S&P 500. There she be. Yeah, 3,800's holding so far. And it probably will hold. I don't see any good news anywhere. That doesn't mean it won't rise, but nice resistance up here at 3,800. It did actually get as high as 3,813, but it's hanging. That resistance level is holding so far. If we get a break above it, and then we just got to trade what we see. We're going to be bullish. Maybe the recession is already baked in. Yeah, that could be a stance that institutions take. It's already the recession is baked in. The damage is already done. We've crashed the market, and we're going to take it up, and that could happen. It happened during COVID. When doom and gloom was happening, the markets rose. Of course, there was some stimulus behind the scenes. So, anyway, that's what's up with the markets. Let's take a look at live train wrecks. I don't have live train wrecks right now in Tom's tools. So I like to go to lovers and losers, analyst downgrade. I'm also conscious not everybody has think or swim, but this is a way to get live opportunities. Look at Baidu, top of the list here. This is a Chinese. Whoa, baby. Yes, 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 yes. So there's Baidu. Let's look at, these are great opportunities for us. So I just got to figure out where to sell. Baba. I like Baba right here at 70. If there's any credit, maybe 65. If there's intermediate strikes, maybe. So we could look at Baba at 70. And if you're, what's the word I want to use? If you're compelled, you can start looking for trades as well. Let's tag team this. Start looking for bearish credit spreads on Baba, Baidu. I'm going to look for some here in a minute. What are some of the other stocks? FXI. Yeah. This is nice here. FXI. This is the Chinese large caps. You got MCHI, which is another China market ETF. Boom. Yeah, baby. Some of the other stocks. Let me go to my list here. Let's just go through a few of these. NetEase, NET. Huh? Oh, that's not the right symbol. That's not 10 cent is the stock I want. Yeah. All right, we're gonna skip that one. JD, Neo. Yeah, see? Everywhere. Blood is in the water. Let's go get some money. Okay, now I could run the scanners, but we don't have today's data. So I'm just gonna go through some of these here and see which one I think is positioned the best in relationship to resistance. So here's Baidu. I don't want to sell at 80, maybe 85. I would love to sell at 90, but that's so far away. Doubt there's any credit. We need to get this on the first half hour of the market because the IV is up. So we want to do this in the first half hour of the market, maybe in the first hour, but certainly the first half hour. It's blood in the water, panic, sky's falling, IV's up. We just got to be calm and say, well, I don't think the stock's going to bounce to a certain level. So Baidu is a little bit farther down. Baba, I like it 70 a lot. Now the stock's at 61. I don't know what we're going to get. So let me show you how to figure this out using live data. All right, so I'm just going to go into the option chains and just do a live look, like what is actually available right now. Here's a Friday trade on Baba. The IV in this and these options will be more than the IV and the options for November 4th, a week from Friday, 11-day options. So there's more IV in these than here. So I want to look at both. Let me get some more strikes here. Let's go to 30. And once again, because I don't remember, I'm looking to see what's at 70. Is there anything up here at 70? I don't know. There might be 70, 71. What? 70, 71. This this is for Friday. Okay. 70, 71. The mid price is 13 cents. So the risk in this 1 point spread is 87. Hey Siri, what's 13 divided by 87?
3013 divided by 87.
Try that again.
3000.
Hey Siri, what's 13 divided by 87?
13 divided by 87 is approximately 0.149.
15%. 13 is 15%. 14 would be a little bit more than that. That's a trade I like. I'm not even going to do a risk graph right now because I want to get it. My risk in this trade would be the balance of the width of the spread, which is $1 minus the credit. So my max risk, that's moving around. I'm going to try to grab it. This is going to be all over the place this morning. So in the fray, I want to see if I can grab 13 cents. Now at 13 cents, I'm just going to calculate how many contracts I want to do. 87 cents, we can do 6 contracts and that'll get us close to 500 bucks. I'm moving fast because I want to get in. So 13 cents is the mid price. Let's ask for 14. Going to do 6. That would be 86 times $86 of risk times 6, which is just under $500. I know that. We're at 12 cents. I might have to drop it to 13. Confirm and send. Send. Let's see. Working orders. Gotta go to the right place here. Now it's at 10 cents. Let's drop it to 13. And let it sit for a bit. Yeah, this would have been better right at the open. 13 cents. Nope. It's a 10.5. Let's try for 12 cents. And I think I'll stop there for now and just see if it fills. 12 cents. Confirm and send. Send. 10 cents would be 11% by the end of the week. Now, if I want to build this, I can just build it. And I could use one of the scanners just to kind of get a fast look at it, and then I'll edit. Single strategy. Everybody has these. Call credit spread. Searchers. Single strategy. Call credit spread. I want short term on Baba. It's going to give me Friday prices right now. It's not 10 o'clock yet, so I don't have the current prices for today yet. But I'm going to see if nothing comes up. All right, so I'm just going to go ahead and go into option chains, option chains, looking at Friday expiration on Baba. Update. I only want the Fridays, 7 days to go. And then, now of course, Baba is now well below 70, but I'm still going to build the trade. -1. I think somebody just got it. Did anybody just get that? Please let
I
us
got
know.
it at 13.
You got it?
Yep.
Boom. All right. So if we got this spread for 13 cents, 0. Let's just see what this is going to look like. So this was just filled. I'll track it since Andrew was just filled. We did 6 contracts. Risk graph. So there's what, almost 15. I just got it as well. There's 15 cents there, 15%, just under, between now and Friday. We don't know the probability of profit, but it's going to be very high. And when the stock opens up down here, we'll get a better look at the risk graph. So we're trading without Tom's tools at the moment for the most part. And this is the sniper game. This is the sniper game. All right, let's stop for a sec. Did anybody have a chance to play with any of the others? Dean got it for 17 cents. Go, Dean. On Baba. How do you guys like this strategy? Does it feel a bit vampiric? Sniping.
I was
Take them while they're down.
Yeah, I was also able to contract my upper spread on the Zoom call and get the 68.70 put.
Nice. Excellent. And you contracted the upper spread, Andrew?
Yes, did that first.
Excellent. Okay, let's do another one. All right. Yeah, I get to get up in the morning and do this every day. It's the best. Let's go ahead and look at the top 10s, the biggest losses in the NASDAQ. So I've gone to watch list, top 10. Now I want to look losers. I want this is the best. Bad news, stocks tank. Baidu on the top of the list there. We'll go look at Baidu here in a second. See what we can get there. And Baidu's down 16%. Baby, we like that. Hoodie. Now, some of these don't have options. Just looking through the list. All right, let's go to the NASDAQ. Top 10 losses. Was I just on the NASDAQ? Yeah, I was. Let's go to the New York Stock Exchange. Now, Pinduoduo, PDD, is also a Chinese stock. This could be good. Let's see where, it depends where support resistance is, though. Oh, yeah. Yes, we like this one. Pinduoduo, Chinese ADR. So yeah, 50, 52 and a half, 60 ideal. You see what I'm looking at here? So I'm like, all right, the stock's now cracked below the support level, likely further downside. If it does recover, where might it recover to? I would say as close as I want to get would be right here at the bottom of these peaks here, which is 52.50. The stock's dropping as I speak. It's already dropped more since I've been speaking. So let's go to trade and we'll do the same thing for Friday. And so again, let me just see what strike prices I want. Let's see if there's any 52.50s up here at the 50-day average would be ideal. Is there anything there though? I don't know. Let's see. 52.53. A 6 cents credit. That's for selling the 52, buying the 53. That is about 10 cents, which would be 10 cents risk 90 cents. The width of the spread minus the credit is the risk. So that would be 11%. You can grab 11% between now and Friday. Is this real? Yeah, it is. You could buy, get 11% between now and Friday, provided Pinduoduo doesn't have a dramatic recovery in the face of a strengthening communist government in China and all the restrictions on the stock market that come with that. Now, if you want a bit more credit, then do some more time. Let's go to the next expiration, which is the 4th. And interestingly, the slippage is so wide on this one that even if you go out a week, you're only getting 2 cents credit. Let me look at the actual bid and bid-ask spread on these things. So here's the 52. Yeah, the slippage here on the ones for Friday aren't that big. Look, there's well, it's 9 cents now, so it's fluctuating and very volatile. Over time, though, it will flatten. Here's 7%. So there's got about 20% slippage up in here. And that's because of the doom and gloom and all the extra trading that's going on these options. So 52.53 is about as close as I would get on this one. That would be right here. Let's just check to see what the 53. Now watch this, a little bit of analysis here. So as you go up in strike, 50, 51, 52, 50, 51, 52, 53 by the higher, you can see how much stepping up a notch increases the potential credit in the trade. So 52 gives you 19. See this one here, the 52, 53 credit spread is giving you more than the one beneath it. All right, so this is great. This is now it's moving around a lot. I know that, but let's go ahead and just go after 10 cents on this one for this week. And I don't know if we're going to get it, but let's try. So if I do get 10 cents on this, now it's already down to 7. Let's see if we can catch it. Put out a trap. I wouldn't take anything less than 10 cents on this one. That would be 90 in risk. So if I did 9 times 5, 540, let's do 5. That'll get us at 540 in risk. 10 cents credit, 90 cents risk times 5 is $450. So that is actually less. So let's just throw a line in the water, see if we get it. Selling the PDD 52, 53 call spread for 10 cents. It's gone from 4 to 7 to 9. I don't know if we're going to get it. Confirm and send. I would let this sit out there for the day. There'll be some bargain hunters that will come in. Currently, we're at 10 cents. It's at 8.5. So I think we might catch this one today. If Pinduoduo, PDD pops up a little bit, then we're going to get it. Now, if the stock continues dropping into the close, maybe at the close, you come in and say, all right, if the stock's down here at 40, then what can I get for the 50s? So that's what I would do on this one. So I'll let that sit there. If it does fill, I'll track it. Here's my 17. Actually, I got 17 cents on the Baba trade. So let me track that at 17. Hey, Andrew, before I track it at 17, were you, what was your fill again? 16,
13 cents.
13. Was that a live fill?
That's live.
account? That's a live account.
Yep.
All right. I'll be conservative and track it as a live. I mean, and here's the thing, in Thinkorswim, I got 17. Now, I think that's probably possible in the live market, but Thinkorswim sometimes will give you a better fill. And if you have Thinkorswim, you'll know that. So what I'm going to do here is choose to be more conservative about the fills so we can track something that was actually filled in a live account. So I'm going to save this in Sniper Live. And then I'm not going to do it now, but after the call, then what I'll do is post it in the boards as a new trade. So I'll do that in a bit. Okay. What else do we have? We got about 5 minutes before the top of the market. Let's go through our progression here and see. Here's JD. Here's another one. Now, JD is also a Chinese ADR.
Oh,
Yeah,
wow.
see, that's a nice one too, huh? Now, it's not a good idea to double up on these, you know? We've already got one on Baba, so we need to kind of calm down a bit and not put 3 trades on the same stock. So I would be hesitant to do it all in general, but let's just see what's there. Maybe there's a better trade here than on the other. So again, where's my line in the sand? I would say 42.50 is ideal. Right up here. 41 would be really good. So I would say if I can get 41, cool. If I can get 40, if I have to go down to 40 and get a little more credit to make it worth it, cool. But let's see what's at 41 for this week. So I'm just checking strikes. Not a lot of credit. Now this is interesting though. Look here, everybody. This is a 5-point spread. Selling the 41, buying the 41.50. These are Friday expirations. We can get about 4 cents credit, looks like, at 41, but it's a 50-cent spread. So if I was able to get 5 cents on this, then my risk would be 45 cents. 50-cent spread minus the credit of 5 cents. It's showing 4, I know. Let's just say we want 5. And then I'm making 11% this week, as long as the stock doesn't breach 41. Is that going to happen by Friday? Really, really, really doubt it. Really doubt it. Let's see if I can get 5 cents on this one. Now, my max risk, of course, would be 45. So if I did 10 of them, it would be 450. If I did 11 of them, it would be just under 500 bucks. 11 times 45 cents in risk is right around 500 bucks. 495, I think. So let's see if we can get that one just for fun. Confirm and send. So I'm just dropping some lines in the water. I've heard, I'm not a fisherman, but I've heard if there's a school of fish, you could drop a hook in the water without bait and you might catch one. It's kind of like that. This one has a good chance of a fill. So once one of these others fill, I'll cancel the other. I don't want 3 of these on at one time. They're all going to move together. So let's just let those 2 lines sit in the water. Once I'm filled on one, I'll cancel the other. These are 1 week trades. These expire Friday. Ideal sniper candidate. You got stocks that are plummeting based on news, bad news for the Chinese stock market. That's the sniper approach. It works the best. This system works the best on stocks that tank, which is why I go through these lists over here. Okay, let's pause for a sec, see if there's any questions or comments, anything you're looking at. And then we've got about 1 minute. What I'll do in a minute is we will run the scanners on that Chinese stock list and
Hey,
see.
Mike, I send you a list of Chinese IDR.
Okay, where'd you send it?
To your WhatsApp, the MW WhatsApp.
Oh, okay, and okay, I got you. Let me pull that up. Thank you, buddy.
You're welcome.
Oh, there we go. Thank you, bud.
Sure.
There's a lot more there. Thank you for doing that. Let me go ahead and grab these. And we're going to populate our list now. So notice there's text and stock symbols are
Yeah.
buried in here. Huh?
We are not seeing your screen.
Yeah. That's weird. That never happens. Sorry. I have so much going on in my mind. All right. So those are the stocks. And Gerardo, could you update that post I just did with those stocks? That would be cool.
Yeah, sure.
So now I'm going to copy them into a list. I'm going to use my stock list, but you could always see, I've got other lists here I don't want to blow away just yet. And I got to figure out which one I want to blow away. I'm going to keep them in my stock list, but you can create a new list, name Chinese stocks, for example. I'm going to save it in my stock list. It's now top of the hour. It's 10 a.m. on the East Coast. Are these all of them? I don't see JD in here. We just got one. Let me pause for a moment. What did we get filled on? We just got the Pinduoduo for 11 cents. Excelente. I'm going to cancel this other order. I don't want three of these trades on the same, generally the same sector, Chinese sector. So now I'm going to represent these fill prices in the software. I've got to build the Pinduoduo one because I haven't built it yet. So now I can use another tool in Tom's tools, trades, edit, create trade, type in the symbol, PDD, change, hit your latest date. As soon as the data is available, you'll see a red indication here. So I need to change the date to today's date. And then I fill out the form. So we sold the 52, bought the 53 calls. 52, 53. How many did we do? 5 of each. And then I fill my prices. We sold the 52 for 34 and 23. 34, 23, 0.34, 0.23, and then hit risk graph. And there is our beautiful, beautiful trade. 11 cents credit represented, $445 of risk, 12.3% available between now and Friday, provided the stock doesn't make a run up to this support resistance level now. And look at the IV. This IV will start to dissipate pretty quickly today. So if you want to get into this game, you want to do these in the first half hour. And it's fun. Probability of profit between now and Friday, 91.6%. You go to your friends, go to your financial analyst, your portfolio people and say, hey, I've got a chance to make 12.36% in 4 days with a 91.6% probability of profit. And that doesn't account for the news, by the way. That's statistical. They would probably doubt you, but this is the real deal. This is a beautiful, beautiful credit spread. It's ideal. Save this in Sniper Trade. And then what I'm going to do later, as I said, is I'll post both of these trades that were filled this morning on the board. So stay tuned. If you need the strikes right now, you're interested in playing with these. Once again, we sold on Baba 6 of the 70 calls. We bought 6 of the 71 calls. Expiration is Friday, October 28th. We got 13 cents. I just got 17 cents in a simulated account. So I believe that's still available, something around 13 cents, perhaps higher. And then the other that just got filled is on Pinduoduo. Stock symbol is PDD. Selling 5 of the October 28, 52 calls, and then buying 5 of the 53 calls for 11 cents credit. Those 2 trades are in the can. 91.6% probability of profit on that one. Let's update this trade to see what our probability of look at the IV. Jeez. only a 96.7% chance to make 15% by Friday. That's this game. That's this game. All right, now that I've got a new list of stocks here, and I do want I didn't see some of the other ones I liked in that list. Let's add them. FXI, MCHI.
I have another one with the whole list, but they are 250 plus.
That's okay.
You like that one?
Yes, please.
All right.
That'd be great. No, I mean, I should just stop because we don't want to do any more. We've got 2 on the board, but it'd be interesting to see what comes out of the scanners nonetheless. So I'll wait for her to get that up there. The couple other stocks I wanted to look at here was FedEx, which is down hard today. I saw that on the news sites. No, FedEx is not down today. Okay, that was in the news. Tesla dropped on Chinese market concerns. Not that much. Not seeing any doom and gloom. I think WeWork is work, isn't it? I don't know the symbol for WeWork. It's we. Yeah, WeWork hasn't dropped that much. I wouldn't mind this as a butterfly, and perhaps we'll look at that later. Okay, let's do we have the list, buddy?
Almost. 1 second.
Okay. Okay. All right, good. Questions, comments, anybody? Oh, we're waiting
FedEx for an
for
iron condor?
yeah, maybe. Yeah.
Not seeing the list on WhatsApp.
Yeah, it's he's given it to me directly on my personal. We don't have a sniper's WhatsApp feed. So we're gonna post it in the on the boards here. Already there's a post on the basic ones. If I go into snipers and where is it? I had posted it here, I thought. I don't see it. Snipers. I thought I posted it in snipers, but I don't see it. Oh, there it is right there. Chinese stock list. So I'm going to add these to the list I currently have. So that's there, George. You can see it right there. We're going to add some more to this list here in a minute. So just pop into the boards and you can grab them. And let me hit edit here and add the other ones that I had and save. Okay, we're gonna start with this one. So now I can do a cast a wide net. That's what I wanted to say. And I've got those trades, those stocks in my stock list. I want short term, and I'm gonna hit search. What credit spreads are available? None come up, probably because of slippage at the moment. I'm not worried about slippage, by the way, on the ones we did. It's a little wide, but that wideness is because of the IV and movement and fervor that's going on around the options. Once things settle, the news is digested, the slippage will tighten. Baidu, the ones we have, Baidu, I'm sorry, Baba, excuse me, Baba, the one we have, and Pinduoduo have normally very good slippage. So I'm not worried about slippage. I deal with it. I'm okay to take it on in this kind of crazy environment, skies falling environment, and I know that slippage will tighten. One other thing about credit spreads, bearish ones in particular, is you have a built-in risk mitigation. And that risk mitigation is if the stock rises, if it does recover, what's going to happen is all of this IV will come back down to earth. And so the IV prognosis in the event the stock recovers is down. All right. And your Vega tells you, we like that. Negative Vega. So if the IV drops 1 percentage point, then we make 73 cents. The sign of the Vega, negative in this case, indicates which way the position will benefit on IV movement. So negative says down, negative Vega. IV drops, Vega adds money to the trade. So pictorially, what that means is if the stock does recover, these colored lines here will get sucked towards less loss. So there's a built-in risk mitigation with these bearish credit spreads placed when IV is immense, 138, what? Yeah, overnight, by the way, overnight that happened. We were, yesterday, we were right down here around in the 90s, roughly 90, let's call it. Here, the IV is literally off the chart. It's at 114, 115. I want to see it. I changed my upper limit. Maybe just make it a little higher and save it. I mean, look at that delicious IV. If the stock recovers, that will drop a lot, and that will mitigate loss in this trade. And if the stock does bounce and starts to rise a bit, come underneath, give it an upper shot, sell a put spread underneath. So if I see that as an opportunity this week, I'll go ahead and post it as an adjustment. Okay, with that, it's past the hour. I've got to get my car's in the shop. I think I need to get a new car. I had an old car I bought cash, and engine seized Friday on the way down here. I don't have a car, and I'm 2 hours away from San Jose. I have a flight to Houston on Friday, so I got to figure out what the heck to do this week. So I'm gonna I'd like to wrap up here shortly, but before I do that, Johnny, Dr. John, you had a trade you want to have a little coaching on, or you want to demonstrate
What not to do?
what not to do?
Let
Yes.
me find it just a second.
Sounds like a song.
Yeah, it does, doesn't it? Sounds like a country song.
Just a second, I gotta figure out what screen's where.
No problem. And while you're doing that, I am
All
going
right, you
to,
see it?
yeah, we got it.
So this is the CVX, and on Friday, I went to batten down the hatches,
Mm-hmm.
and I didn't do it right. So the first trade was meant to be to sell the 180 call and buy a 175.
Right.
Well, I bought the 180. I think that, what do I do now? I can't tell which is which. Hold on a second. Bottom line, I got things backwards.
Okay.
And instead of battening down, I went the other way with it.
Yeah, I'm just trying to see what you did there. On the 21st, I see the a lot of call trades there. Oh, I see
Yeah.
you bought the
So
160.
I ended up selling the 180,
Mm-hmm.
okay, and buying the 175.
Perfect.
That was my first trade,
Mm-hmm.
all right, which was in error. And so I had to go and I had to undo that by flipping that trade back and then battening down what I had intended to do.
Okay.
It's hard to show how I did that now.
Yeah, there's a lot of legs on the same day. The orange legs there are correct. That's ultimately the adjustment you wanted to do.
Correct.
The under the green legs are correct
Right.
to create the butterfly.
So
Yeah. Go ahead.
well, I'm trying to figure out which is which now. I'm sorry.
That's so, you did, let's see, it's difficult to figure it out. Sold the 170, bought the 175. Okay, so the bottom two are a wash. The gray leg where you bought the 175, and then the other, and then the one underneath it. So the blue and the gray ones are a wash. The upper two, the buying of the 180 and the selling of 180 call, are a wash. So you ended up with the correct adjustment, but you had a couple of extra ones in there that were.
Yeah, and I had a hard time fixing it because I didn't pay it. Evidently, I had a working order to close the trade automatically, and every time I tried to fix this, it gave me an error. All right, so I had to get on the phone with or get online with the support people, and figured out that I had to close that contingent order first, get rid of that in order to make the adjustments.
Yeah, that's correct. So
Yeah.
what do we look like right now after all of that? Actually, let's turn off all those.
I meant to turn that off, sorry.
Yeah. So
Yeah.
now you're,
There's
your
my
max
max
risk.
risk.
Yeah, it was 888. So you've over half the max risk.
Yeah,
Your delta's flat. So you've stopped the bleeding. You can breathe now. You're not going to lose any more for a while. And if the stock vacillates, you're going to make some of it back. So theta is positive. And it's a slow drip with 56 days, but now you have battened down the hatches. You can weather anything that the stock does without
right.
any much more additional risk. So you can breathe into that. That's important. This is our psychology. There is something that something magical happens when you go from being in a position to lose $888 and you drop it to $396, which is only $43 more. So the beatings have concluded. You're not going to get beaten anymore, and now you can dance and go back after. The game now is to see if you can make 396 and
Yeah.
flat and get a break even, and do that, John, with broken wing butterflies. You know how to do those?
Yeah.
I would start with a bullish one, and if you don't find one on CVX, look at USO or any USO stock, because they're all quite correlated. And maybe we can work on that a bit tomorrow, actually.
All right.
So yeah, thank you for admitting your humanity. Appreciate that. Okay, everybody, I think that's a wrap for today, unless there's any calls for support, any other things you want to mention, anything you're looking at that you'd like to share with us, including me. I like those two trades we put on. I think that, barring any positive news out of China, I don't see how that's going to happen. We're going to have a nice little couple of winning trades by Friday, unless we don't. Okay, everybody, that's a wrap. Really good to be with you. Hey, Ricardo, good to have you with us, man.
Thanks, Mike.
Yeah, pura vida, pura vida. All right, I'm going to go buy a new car and find a place to live.
Good luck with that. Have a great day.
Thanks, everybody. And for those in hedge fund, we'll see you tomorrow at 1 p.m. Earnings people, 1 p.m. today as well. So we'll have more opportunity to be together. Okay, everybody, have a good day. Pura
Great,
vida.
thank you. Bye.
Hasta luego.